geopolitical side, it's great to see, right? Because I mean, those guys haven't even met, I think, since before COVID. There's been a lot of tit for tat between China and the US in the last few years. But from a market perspective, putting the positive geopolitics aside, from a market perspective, China still has huge challenges for bonds and stocks. On the bond side, the property sector, as we all know, it's in the doldrums. So they need to do something, a big stimulus package there to get that going again, because it affects so many other parts of the economy as well. And on the stock market side, technology is a big sector. And again, that's where there's been a bit of tit for tat between the US and China. And it's hurt a lot of the tech companies that you've got on the screen right now. So I think you need to see some kind of concrete, resolution and also stimulus to get the tech sector going again in China.
Oliver, just before I let you go, with regards to what's happening with the price of oil right now as well, I think this has been key to watch. The Fab forecast was for something like $84 a barrel for year end. We seem to be pretty much on the mark there. Do you expect any producer response from next week's OPEC meeting, and what else are you looking out for in the markets here?
Yeah, you're right. I mean, it's always good to get a forecast right. I think we're going to be probably there or thereabouts at $84 averaging for the year. In terms of going forward, though, as you said, I don't think oil is going to be supported on the demand side. Demand destruction hasn't come through this year, but if growth slows down into next year, as most are forecasting, that's probably going to be hurting the oil price. So the only thing that can probably keep the oil price where it is and potentially lift it further is if those supply cuts from OPEC Plus get extended into next year. And we, like you, will be watching the meeting, I think, at the end of the month to see what comes out of that.